All right, it's been a while since I've done one of these. I'm actually gonna smash a couple different trades into this one video. All of them are on EVGO. Kind of got a lot going on this chart, but the trades I'm gonna talk about here all occurred in this most recent uh, price action here, from this low up to this high right here. My thesis is basically that we have this. Let's switch charts here. Um, Upward sloping trend line. And I'm kind of just trading the consolidation. I'm speculating that maybe we'll get some sort of triangular formation, condensing, a compression of volatility, similar to how we had here before getting a break to the top side. Um, I've talked about in probably every single EVGO video I've made, this weekly signal you get on the RSI when your RSI crosses the moving average. That is always preceded by a test of a macro structure. So you have this downward sloping channel, right? Here, you test the bottom of it, and then after 2 weeks, you get the cross, or 3 weeks. Here, you test the bottom of it, and then you get the cross a couple weeks after the test. Here, you don't quite test the bottom of it. I think that's consolidation around what's the center line. Um, and then you get the cross. So that one is somewhat of an outlier out of the, I believe, 9 times this is triggered, right? There's another one that's the bottom of the channel, tested the bottom of the macro structure. Although that only existed in retrospect, that structure didn't really, I mean, I guess it kind of existed at that point, but it looked a little different. Here again, tested the extreme point of the structure, then you get the cross. Here again, you test the bottom of the structure, get the cross. Then on this one, we happen to break the structure, express the channel, break down for a while, find support in what became this macro trend line that I'm looking at. Then you get that cross right after the test of the structure, although you did get a couple touches of it. And you got the cross. You did get the cross here and here, but one of the components of this specific signal that I'm looking at is the RSI comes below, I believe it's 40. Yeah, as long as it's below 40, and then it has 100% success rate. So you could have tried to trade that, but it's much riskier. And as you can see, we just got a couple weeks ago, months now, November, mid-November, we got a test of this macros again, and this white box is a gap on the daily. So we filled this gap, tested that blue diagonal, and the RSI was at 38 there. So it came below 40, and now it is potentially, kind of consolidating as it did here and moving towards crossing. So the entire backdrop of these trades I've taken is against essentially trying to front run that signal. Now, there's an elevated risk, right? It's implicitly more risky to attempt to front run the signal because it hasn't triggered. Uh, but that's what I'm doing here. But I'm very quick with taking profit on these trades because of that, because we haven't gotten the confirmation yet. And as you can see here, they're actually both the moving average and the RSI itself are both sloping down. So I'm quick to take my profits and I'm really watching carefully because just because the signal has a 100% success rate, if we do lose this blue diagonal or this low at roughly 287 or 278, then I'm looking low, like 220 and back to all-time lows. Um, but cool thing about the signal is the reliability, historically speaking, and the clear risk management zone. So we have a clearly identified area where to exit if, or a clearly identified area where our thesis is invalidated, and that's what's important, right? So what I'm going to do is let's zoom in a bit here. There's a couple different ways to draw this diagonal on. That's kind of the way I've been looking at it. I mean, you could also do something like, right, like this. I'll leave that one on actually because think I like that one more. Yeah, actually, we'll leave them both on. Just why not? This is how I was originally looking at it, I believe. It's something like this, but I knew that was a speculative structure. So what I'll actually do, yeah, I'll get rid of that. We'll leave this. So you can see we're consolidating in the range prices traveling is getting less and less. And at some point we expect it to increase volatility and break out in a specific direction. So just glance at the Bollinger Bands real quick and see if those confirm our thesis here. Yeah, you can see we're getting a convergence, I guess you'd call it, of the bands, similar to how we did here, right? Before the break. Hopefully we get this clear retest again. That would be sweet. These are always the nicest, just most beautiful moments where it's like, oh, thank you, Lord. Breakout, retest. All right, I'm just gonna, you can even go to managerist as low as that, but and that one actually looks like it roughly filled a fair value gap as well. I'm actually just curious for the fun of it. 382 retracement. Okay. Anyway, so the first trade of the sequence of three trades that I'm going to show you is right here. 294 entry, 309 exit, 5% gain, played out over 3 trading days roughly. Um, and 309, there's a couple of reasons I exited there. I'm going to switch charts. This one's a little messier. Forgive me for that, but um, this dashed line is roughly the center line of this structure that I'm looking at here. Um, Whether it's the exact center or not is kind of irrelevant. You can see it's clearly significant from all this price action, right? You can see it acts as support and resistance. You do get moves above it and below it, um, right? A little bit like here it wicked above, but yeah, it's been acting as somewhat of a magnet, right? Or a midpoint, right? I would call it a premium in price above it and a discount in price below it. So I've been trying to buy it as far below it as I can and as close to this blue diagonal. Now this trade was somewhat poorly optimized. Um, I was looking at this fib, thinking, all right, this 886 is confluent with this blue diagonal. Maybe we'll get a 286 entry. Despite thinking that and looking for that, I set my entries at like I think it was 298 or no, 29. I ended up with a 294 average. But I bought some higher and then I bought more lower and it averaged out to 294, which is roughly this 786, as you can see, which is closer to the bottom of the macro structure than and the center or the top of well, the top wouldn't be the top of the macro structure, it would just be the top of this. I'll call it a medium micro structure, which is one of these two diagonals. Probably more so this one. I'll make this one a bit thicker. But so there you can see there's poor optimization, hence my inability to clearly articulate why exactly I took the entry right there. But it was mainly that. And let's just glance down at these lower time frames. I don't even think there's really divergence at my entry point, but you can see we did get like a double bottom here between these two on the 15, and you did get that heavy uh divergence on the 15 period in the 15-minute RSI there. If we zoom in even more. Actually, it doesn't make it clearer, but you can see it's right there. Oh wait, never mind. That's a different divergence. Scratch that. And then yeah, I took my exit up here towards the I believe 1 hour 50, slightly above it, and this center line. So part of this exit, the poor execution for this exit was just me being actively in the chart at work and making impulsive decisions. Um, it's not really a good excuse for it. I'll throw on these two fibs I was watching. Right, you got this 382 at 311. which is confluent with that center line. And then you got this more local fib, the golden pocket at 310 to 311. Uh, I recently had this kind of the psychological trauma is what I've been referring to it as. I've consistently been missing my orders have been missing by 1 penny. And you can see the effect that's having on my trading in this specific trade where I'm exiting at 309, even though all the technicals on the chart are telling me, right, this one says, if I'm looking at this 382 confluent with the center line, that's 311, that's 312, and then that golden pocket was 310, 311. So I should have exited, 311 would have been the rational level to take that profit at if I'm just for the way I chose to manage that trade. But I cut a penny or two off of that, as you can tell, at 309 to assure my order got filled. And we did end up coming up and testing the bottom of this 1 hour gap, 317. Let's check that momentum signature. Yeah, you can see we got the inverse of what we got here at this double bottom with that RSI divergence here that signaled some sort of reaction coming. We got the opposite of that up here, right? You got that the opposite of that where this wick here, which is a wick to the bottom of this gap, which acted as resistance, also happens to be a previous flash, was the lower peak on that RSI, and then we had we went to search for support. What are you gonna do? I'll take the 5.1%. Now onto the second trade. You can see it right here. Actually I'll leave it in the chart. So at this point, I started just trading this trend line. If you go to the 15-minute time frame, you can see the trend line is roughly confluent with this 50-period moving average for some time up until it breaks it. So I was using that confluence to enter my trade. I took the entry at 299. 296 would have been looking for it perfectly. Once again, that's some poor execution. Likely, in my opinion, based off of that psychological effect of continually missing by a penny or 2 pennies, 0.003% sometimes. It's just so I took that entry there. You could see we had that divergence, right? RSI is, I guess it's not quite lower there, but you can see we're significantly higher than we were down at this point. We have that trend line and that 50-period moving average to use to manage risk. And then I just took it up 3%. So from 299 to 308, 3% gain, lasted one trading day. Uh, Specifically on this one, my analysis was telling me 314. I was looking for this center line. I think there was a flash on one of these time flip frames at 314. Can't recall exactly. It was a couple days ago. Now it was earlier this week, Monday. But the specific chunk of capital I'm taking these trades with is meant for kind of quick in and out, in and out. So I'm just taking, I'm looking for 1 to 3% really. Um, and then looking for the next opportunity. Yeah, I took it roughly to the golden pocket there. Not really good reasoning for an exit. A winning trade, but it's kind of part of the reason I make these videos is because this is the moment I realize I didn't have a fully articulated plan. I wasn't really sure where I was taking this. I mean, I had ideas and then I kind of just acted on impulse. Um, and on doing that, if full optimization would have given me was another 6 cents per share, which was the profit I took 9 cents per share. So 9 out of 15 cents is, 65% of what was going on here. Then my third trade, as you can see, Same thing essentially, right? I just waited for it to come down towards the center line. I entered a bit higher again. 306 was where my entry was. You can see it came and tested this cross and this diagonal nicely. Put in a not quite a double bottom, but you can see the RSI came down. Didn't quite, put in divergence from this low, but it was like a test of the center line, and you get this consistent signature I noticed where it comes down roughly to the center line area um as it tests the trend line or the moving average. And you can just use that trend line and that moving average as your stop loss, as you can see. And I also, made sure to go slightly below these previous lows because if we lost these lows, the 50 period moving average and the trend line, I didn't want to trade anymore. Uh, but you can see this I did not optimize fully. 303 is probably where I should have been entering, or 30, maybe even lower, but then I would have missed that trade. But I entered all the way up here at 306. So there was, how do I explain that 4 cents right here from the trend line for my entry? I can't. And this one I took up to 320. That was a 4.5% gain. And as you can see, 320 is towards the top of this diagonal. We filled this gap. That's actually when I saw us filling this gap in real time. That's when I set my sell order. It just happened to be at 320, not 319, where that gap actually filled. Because at this point, we've got divergence here, right, across these highs. You're also lower than this peak. So I didn't like the momentum signature, and we're approaching the top side of this more macro structure. Even if we did get that move fully up to like 330 something, uh, the risk is much more on, up here than it is here or anywhere near this diagonal where I can manage my risk. And in retrospect, it did turn out to be a pretty good exit. Almost top ticked that one. Uh, and I actually, yeah, I didn't take the trade again here. That was just that's hard to explain because it was really just an intuitive feeling where I felt like this looked like it was rolling over. Um, can I explain that? I don't think so. Oh yeah, look, you can see we also approached that 50 period. Um, I mean the 200 period on the 1 hour. But at that point, I didn't retake the trade because I just kind of felt like it was rolling over. And I guess you can kind of see it here on the 1 hour. The momentum's kind of topping out. Yeah, I don't know how to fully articulate that. Let's flip up a couple time frames, see if we can see any candlestick patterns that I was looking at the time. Yeah, you can see we're getting just stuffed below this 50 period moving average on the 4 hour and just wicking above and getting shot back down into it. Uh, and I'd rather enter on a break of it than than because you could look at that and be like, maybe we're consolidating at resistance and then we're going to get the next break up. Why wouldn't you look at it that way? Well, I would rather wait for confirmation of a body open and maybe even close above that, or just open above, take the trade there and sell below. It turned out that that intuitive feeling was right, and yeah, you can also see that divergence. I mean, the negative divergence here, right, across this wick, these peaks there, and you got that there, and we're mostly in this leg of the trend, right? I'll zoom out a bit here. You see we have negative slope and splay of the moving averages. We're in a downtrend, right? I mean, kind of in ambiguous territory overall because we have this low, high, higher low, lower high, but then a higher low, higher high than that, but lower than this. So we're kind of in this ambiguous territory in this larger this top blue line is what I'd consider the top of this structure, even though it's speculative at this point. There's only two touches, but it's still represents a condensing a compression of volatility or of range of price. So given that larger context, zooming into here with that negative slope and splay on the moving averages, that's kind of also part of those are all components and probably larger components, the backdrop, the actual context of where that intuitive feeling came from and why I was leaning more towards not not taking another trade on this and kind of just stepping back and letting it develop. And you can see we broke it. We've come down to here now, and this is where we're at. We actually today on Friday we just put in a bearish engulfing. So I'm kind of looking like, all right, maybe we'll come down and finish filling this fair value gap at 294, which is clear on the 3 day, 294. Um, yeah, we'll just kind of watch to see how this plays out. So I guess some things I'll take from this is, I mean, it worked out in my favor, but you can see all three of these could have been more optimized. This first one the most. I really left a lot on the table there. And the worst part was my charting. When I did my analysis, I came to the conclusion that like 286 was the level to look to, but I didn't. I acted differently than I saw what I saw. So gotta be careful about that. Gotta be mindful and make strong decisions. Oh yeah, one more thing I wanted to point out was in the context of the larger things, in the 4 hour chart I was just showing you this consolidation at the 50. If you flip to the daily, you can see we wicked up to the 50 there. That was that move to 322 where I got out at 320 and then we failed and now we put in a bearish engulfing. So I'm expecting this to come down now. Um, and the thesis would be that maybe we get something like, this. Show me 380, baby. Actually, if you go to the weekly, the reason I'm looking at 380 is because we have this fair value gap there. Whoops. And at some point, that 380 to 410 level becomes, a third touch on this macro blue diagonal on top. And I'm wondering if we'll get that before we get a conclusion to which way this thing's going to break. And sorry if that was scattered. First time trying to crunch a bunch of trades into one, but that is my EVGO journey this last week. Thanks for tuning in.